Whoa, what's up, everybody? Michael Silva here. Hope you're all doing well. The Bulls, they're back in town, getting above that 4,200, breaking out of this tight area of consolidation. But don't get all FOMO'd in at this moment. Got to be very patient, especially if you missed this run. That's what we're going to talk about on today's stock market brief. We're going to get right into it today. Try to keep today's video pretty quick to the point. I haven't been feeling all too hot, but I feel better today, okay? So, the last video we talked was on this specific day, and what we had mentioned, if you haven't watched it, go back and watch it. What we had mentioned was price was getting below the quarter date anchored VWAP, and we said that if price gets it back above it, that's when you want to get more bullish, because you don't want to miss out on a move that could potentially take us to what we said was the prior high for 1831, which we took that out in a very short 2 trading days. So hopefully you were able to catch this move up into that area. But remember, FOMO is a real thing. So there's going to be people that try to chase it, maybe catch it up a little bit higher. But you got to be a little bit cautious, because if I do look at the overall market from a 15-minute perspective, we take into consideration the weekly expected moves. We are trading outside of the weekly expected moves. The daily expected move for the SPY tomorrow goes as high as 422.21. and as low as 416.25. That doesn't mean that it can't break these levels, which we've seen happen, but those are the key levels to watch. Remember, 68% of the time, it closes within those expected moves. If you just think about this as a distribution curve, okay? So if that's the case, there is a high probability that for the week, come tomorrow, we close back within this area. Will we? I don't know. We might not. Remember, we've been compressed for so long, building open interest, and we finally exploded outside of that. Now, if we take a look at something like the RSI, we're a little bit frothy here. So a consolidation or digestion probably would be healthy, obviously. And then also we have a negative divergence there on the PMO. Keep in mind that we are above the week to date, month to date, 5-day moving average, also that quarter to date, which we had talked about prior. So if price comes back in, as long as we reconnect with these and they can hold, that would be a positive sign for the overall market. Now, be aware, we have a big option expiration, and on top of that, we have Powell as well coming out tomorrow, along with some other Fed other speakers coming out tomorrow. Now, I want to also talk about the zones. This is pretty interesting because on the prior episode, we talked about a lot of things were lighting up green, despite seeing some, things towards the higher end of their zone. Well, now you can see that things change very quickly, but there's a couple assets in here that I find to be very interesting. One being the dollar. The dollar is up there north, outside of its upper zone. So we close at 103.5. The higher end is 103.65. So we're right upside there. We closed outside of the prior zone yesterday. And then we have the VIX at the lower end, and we have the S&P 500 towards the upper end. But it's not just that. We have the spiders, we have the Qs, and we have the IWM all turning red here too as well. Now, what I find interesting about this is it's very rare that you see the S&P 500 light up red, so towards the upper end, and then also you see the dollar, but then also you see the 10-year yield too, which is very interesting, because you typically, when you get a rapid rise in yields, so for example, when we take a look at something like this, this is the relative strength line between XLK and SPY, XLY. Okay, you can see here when we get a rapid rise in yields, it's not typically good for the relative performance of XLK relative to SPY, or even consumer discretionary there too as well. So we're starting to see a little bit move higher there in the 10-year yield, and we're starting to still see strength come in into both of those from a relative standpoint. So that to me is interesting and should be watched closely. But like I said, the other thing here is the dollar. It's very rare that you have the dollar reach the high end at the same time the S&P 500 reaches the high end. Okay, so what this means to me is, because of this correlation, you typically go back into a negative correlative state at some point. So when we look at something like, S&P 500 relative to the dollar from various correlation standpoints, that could be 15-day, 30-day, 90-day, 120, 180. The longer you go out, you can see that we are negative correlation. It's below zero, right? However, in the recent trading days, so like 15 and 30, we're getting into a positive correlated state. And as you can see, it's not like that can't happen, okay? We've done it before, but it doesn't typically stay there for too long. So I did a little bit more digging on this, and I go back because I post all this stuff in my Discord, so you can always go back and see it. But I wanted to look, okay, so when's the last time the dollar reached the high end of the zone with the S&P 500? And I went back and I looked at, I found one time where the dollar reached the high end and the S&P 500 reached the high end, and that happened to be updated for February 3rd. So what took place February 3rd? February 3rd was this day. Pretty crazy. It was actually marking the high of that point. So this tells me that something here is going to give. Is that going to be the S&P 500, or is it going to be the dollar? Now, if it's the dollar that goes down, that's going to make a good trade for potentially gold, or maybe even gold miners. And you can see actually these, so bonds, right? And I'll point out those in a moment, but gold and silver are at the lower end as the dollar's at the higher end. So that, to me, that correlation still stays. So if the S&P 500 is not affected and the dollar comes off, perhaps the S&P 500 could push higher, but then you're also going to see assets like this move up as well. Now, when I look at something like the S&P 100, everything's lighting up red. We talked about that on the prior episode where we talked about Microsoft having about 1.7% upside. Well, now it has 0% upside to 4% downside. That doesn't mean it can't go higher. These are dynamic. They're constantly changing, but just notice that they all lit up red. So if you're chasing into this, AI movement right now, this isn't the greatest time to chase in. You want to see consolidation. You want to see a pullback. You want to see that. And you could also look at something like this, where you look at back month versus front month volatility. We're up there around 1.2. Remember, we talked about that prior, where if you reach up into those levels, it's marked turning points in the market, but it's also marked consolidation points, as you can see right here in this chop that we've been kind of in. Okay, let's go on. This is the fixed income zone section that I share with the Discord, and I just wanted to share with you that everything here is also lighting up green. So that tells me, okay, where's the trade potentially? Where's the next trade? Well, you could potentially look at this and be like, well, the Qs are breaking out, composites breaking out, which we talked about the composite potentially breaking out on like 2 or 3 videos ago because of its consolidation, and then also semiconductors, right? How that could be that trigger that really makes it move, and that happened. But what's the next trade? Well, the next trade to me is not chasing. It's not FOMO. The next trade to me looks like it could be a potentially movement into, one, if the dollar comes off, I think it's going to be gold. I think it could be some gold miners. I think it could be, what else is yellow here? XLP, XLU. Those are coming towards the lower end. So this to me tells me that there could be either a consolidation, a pullback, and that could be where a good area to put some capital in play could very well be. All right, so that's kind of just my thought process there overall. The last thing I want to just close with is obviously the expected moves, but on the bigger time frame, I'm probably going to be the only person that's going to be calling this out, but the Qs have reached up to the monthly expected move. So not only are we trading outside of the weekly expected move for the SPY and the Qs, but when you scope that out and you look at the monthly expected move, remember, 68% of the time, it closes within the expected moves. We're at the higher end, and it's May 18th right now, so we still have a lot of time left. Tomorrow, we have Powell, and we have option expiration. So, anything could really happen here, but this is not exactly the place would I be, super excited to chase. I would be looking at these smaller time frames and getting a little bit more constructive on how you want to buy entries. Remember, we talked about quarter to date. When we got above, you'd be bullish. Now, if you're buying up here, it depends on your time frame, right? If you're just buying in for a couple of days, maybe not the greatest entry, obviously. But if you can wait for a pullback, right? Maybe to the lower end over here. Maybe if it reconnects with the 5-day moving average and it starts moving back up, that would be much more positive than chasing it as we're getting pretty extended with some divergences, obviously, there taking place. So I hope that gives them some insight into this crazy market that we've been into. I'll be back here on the next Stock Market Brief, most likely doing the weekly recap either tomorrow or Saturday. See you later.